This video is brought to you by Credit Grid, your source for business credit knowledge. In this video segment, we will explore the basics of starting a business. Let's begin. Let's start with establishing your company name and filing with your legal entities. First of all, you need to learn your state's regulations and find out if there is another business that has the same name that you're proposing. When you find a suitable name, you must register your name in your state and secure a license. Then, it is essential that you publicize your name and renew the filing periodically in order to make sure that your name is retained. If you already have a legally filed business entity and want to create another one, you need to review your state's rules for establishing a DBA, or doing business as. You have a legal obligation to disclose who actually owns the company, or you must file a doing business as statement associated with your other existing company. You'll need to renew your DBA filing periodically, depending on where your business is located, about every 3 to 5 years. Now let's talk about the sources that are very typical for initial financing of your company. The number one source for most companies that are just starting is personal savings. Combine your own investments with funds from other sources. Investors. A lender will have potential investors in your financial statements and a business in your business before they will personally invest in the business. They will also take a look at the leadership team of the company and determine whether or not they trust you. You should analyze the friends may believe in you and invest be ready to show them how and when. Keep in mind as you are writing your business plan, make sure that you always retain the trust and confidence your plan of anyone so that it tells how your business will make money. Loans and other lines of credit from financial institutions can also be a great source of business financing. Include debt, but you need to have good credit. To establish good credit, sometimes you borrow money to be repaid over a period of time, take out collateralized loans. The process of paying the money back is usually according to an amortization schedule and once you have good credit history, the interest and principal portions are to be paid off over time. It is often true that personal guarantees are required on most loans. If you have too much debt, lenders may consider your business to be overextended and risky. Equity financing is the exchange of money for a share of business ownership. The disadvantage of equity financing is that you no longer have complete ownership of the business that you created. You will share some degree of control of the business with your possible investors. Now let's review some of the regulatory environment that surrounds business. The first of these we'll discuss is wage laws that exist in order to protect the workers that you may hire. A key piece of legislation that was passed is the Fair Labor Standards Act that sets forth minimum wage and overtime pay standards. All of your employees must be treated according to these laws. It will be important for you to become familiar with the laws in your particular state, but understand that wherever you are hiring workers within the United States of America, you will be required to pay at least the minimum wage plus any additional premium that may be required by state law. It is also important that you engage in record keeping and thorough accounting of your workers and be prepared to face an audit should something happen. While it is important that you abide by all the laws and rules associated with hiring employees, it is also true that by hiring employees, you can add skills to your company that you simply don't possess. This allows you to concentrate on what you do best. When you hire people, interview them and find people that you can work with. Hire them also on the basis of their education, experience, and competence. You may want to consider at first part-time employees that have lower benefit costs. Remember that if you hire an employee for more than 3/4 time, they will be benefit eligible and you need to be careful about that. But make sure that whatever you do, you follow all the laws governing U.S. workers. Make sure that you properly document those workers and don't get in trouble with any violations that could actually shut you down. Another important piece of business regulation includes zoning and planning rules in the community where you want to open your company. Learn whether your local government permits home-based businesses. Fulfill the requirements that they have in order for you to do so if that is your interest. Check with the local zoning board or building agency. Your business needs to comply with local regulations or you could face financial penalties. Local agencies could even close down your business. Once you feel that you've complied with all state, federal, and local regulations, it's important for you to announce your company to the world. Pursuing high-quality advertising and public relations is an important part of that. Public relations is simply defined as all the efforts needed to maintain a positive public image. You should learn how to write an effective press release. Put information first, include contact information, write it in such a way that you target your audience, plan ahead and distribute your press release in advance, and consider hiring a PR professional if you have the budget to do so. One of the most important things that you can do in starting your business is to manage your business expenses. Focus on real needs and not just wants. Let's break down business expenses into different types. Let's begin with short-term expenses. These include wages for part-time and seasonal workers that may change within a 6-month period, among other things. Long-term expenses are such items as leases, contractors with vendors, and other expenses that may last for up to a year. Fixed costs include those things that you must pay in typically a fixed dollar amount regardless of whether or not you produce. Items like this include mortgage payments, insurance premiums, etc. By effectively managing costs and keeping those under control, and effectively advertising and engaging in quality public relations, you will maximize the spread between revenues versus your expenses and costs. Thus, you maximize your net cash flow. You need a steady flow of cash in order to operate smoothly. Here are some tricks to keep in mind. 1. Lower your overhead by shopping for better pricing on what you buy. Cut back on non-essentials. Focus again on needs, not wants. 2. Work with reliable vendors that deliver quality merchandise on time at a fair price. Develop relationships of trust with these vendors and never violate that trust. 3. When things aren't moving well, consider lowering prices slowly on slow-moving inventory in order to help induce sales. Don't hold on to a high price hoping that you can someday sell these. Your money is tied up in that merchandise and you need it back to pay your bills. 4. Improve your cash tracking by making a flow chart showing when you expect cash to come in and go out. And finally, make sure that you collect your receivables promptly, send out your bills on time, and engage in vigorous collections to keep your cash flowing. A critical element needed to maximize sales, particularly for retail businesses, is choosing the right location. Many of the bigger companies spend millions of dollars on understanding and choosing the perfect location for their establishments. You should engage in a vigorous effort to determine whether or not there's a need for your product or service in that particular area. Then choose an established business district that will reduce your need to advertise and give your location credibility. You will get new customers who just happen to be shopping in the area and who see your sign. Consider the features of the property. Make sure that there is good flow in and out as well as parking, all of which is critical, particularly for retail establishments. Now let's put this revenue and cost together into a profit and loss statement. A profit and loss statement, sometimes referred to as a P&L, measures the activity of a business over a period of time and tracks whether or not it's profitable. The basic formula for profit and loss is this: revenues minus expenses equal profits. Now, profit is sometimes called net income or earnings, but it takes several steps in order to get there. If you start off with gross revenues, which is simply the sales volume and the dollar value of your sales, and then you subtract operating expenses, you yield gross profit, sometimes called operating margin. And from gross profit, if you subtract out overhead or fixed expenses, then you end up with operating income. Then you add to or take away from operating income other kinds of non-operating income or expenses to adjust and come up with pre-tax income. And finally, when you have pre-tax income, then you minus out the income taxes paid to finally derive net income after taxes or profit. It is important to remember, however, that profit is not the same thing as cash flow. So let's go over those definitions again. Revenue is the money you receive in payment for your products or services. Operating or variable expenses are the expenses that rise or fall based upon your sales volume and productive activity. Gross profit margin or operating margin is determined from the amount of operating income divided by gross income, or it is the amount left when subtracting operating expenses from revenues. Now then, overhead or fixed expenses are costs that don't vary much month to month and don't tend to rise and fall with the number of sales you make. This includes, of course, any fixed salaries, rents, insurance, etc. Operating income is income after deducting operating and overhead expense. So now continuing on with these definitions. Other income and expenses for non-operating. These are how the firm manages its finances with respect to interest and dividends from company investments. Other expenses might include interest paid on loans and also depreciation write-downs. Let's pause for a moment and think about that. This is the reason why profit is not the same as cash flow. When you take a depreciation write-down in the form of an other expense, there is really no money paid out of pocket, so it is called a non-cash flow expense. So in that sense, profits are actually going to be probably less than total cash flow or net cash flow available. Pre-tax income is income before federal and state governments take their share. Income taxes are computed from pre-tax income, and after you take income tax payments minus from the pre-tax income, you derive then finally net income after taxes, which is the amount of money that you have in profits at the bottom line. Finally, let's review a few business resources that are available to you. There's some great websites from the United States federal government. These include the U.S. Department of Labor, which includes information on labor law, workers' rights, etc. Look up information regarding that at www.dol.gov. The U.S. Bureau of Labor Statistics has important information related to regional economic analysis for such things as inflation rates, etc. Go to www.bls.gov. Another important source of information related to trademarks and patents and what's required there, go to the U.S. Patent and Trademark Office, www.uspto.gov. And finally, for good regional economic analysis to help you with your business plan, you might go to the United States Bureau of Economic Analysis at www.bea.gov. Thank you for watching this video. This video is brought to you by Credit Grid, your source for business credit knowledge.